Hi, hello, and welcome to this week's Stock Spotlight. Renergen is all over the news. What's the hype? Steinhoff finally delists after 6 years. PSG and Karoooo, with 5 O's, releases results. Let's see what the experts have to say about that.
Thank you, Ingrid, and welcome everyone. So let's jump straight into it. First of all, Renergen, once again in the stock spotlight. So they just announced, or they gave a sense announcement because there's been some social media, not outrage, but just interesting time for Renergen, and they believe that the reason for the downward pressure on the share price is because of the negative social media sentiment. Which is quite a weird statement. And Renergen has denied any association to state capture and maintains that it has a right to produce and sell helium. So there was an analyst or someone that's just been highlighting maybe a few things, and that has a lot of people on social media quite concerned. Look, overall, here's the bottom line for me from Renergen. Many of those points are valid concerns. And we've spoken about how the market has lost its patience. So for those who hold the Renergen shares, the one thing that shareholders would like to see now is actual results. Like when you give the next trading statement, how much revenue have you generated? How many have you sold? All of those kinds of things. Now it's up to start showing the results. And I think if they do that, we might see a nice run in the share price. Where if they disappoint, where's the bottom? What's your take on what's happening with Renergen and as the market just completely lost its faith? Where's your head at?
Yo, Higgo, what a time to be alive at the moment. I love this because I actually think it's quite bullish for the market, quite positive for the market because it's information. Shareholders want information. Albie Cillier is like an investigative, I won't say journalist, maybe he's like a share activist. You can actually check him out on Twitter. He's really digging into Renergen at the moment. And what I like about it is if his allegations are true, then Renergen shareholders must know that. Then, all is not well at Renergen. And if it's not true, they must have the backing facts and the results to show that, okay, no, you know what, this is actually not true. Here is a true story. So shareholders win at the end of the day. We want the truth, basically. So yes, I completely agree with you. Renergen needs to start delivering because the market has completely run out of patience. I see yesterday again 6% drop. Where's the bottom? At the moment it's a falling knife and it's not looking pretty. So I don't actually know where the bottom is, because one of the mistakes people often make is if a share drops by 50%, they automatically buy because it's like, how low can you go? But trust me, if something has gone down 50%, it can go down another 50%, unfortunately, especially if there's nothing to support it. So let's see what happens.
Cheap can always go cheaper. But I love the fact that there is some, bear case scenarios. With my biggest holdings, for example, Santova, I love it when people highlight the risks or what could potentially go wrong, because as an investor, you would want to know the bull case and the bear case. You would want to know what you're getting yourself into. So I love to see that there are debates, not just on Renergen, but various companies. It's good. And then next, for another company that the falling knife just continued to fall below earth, where cheap just became, no value at all, and that's Steinhoff. So they will officially be liquidated next week. And many say it's good riddance. What a story that's been. I was one of the shareholders who lost money in Steinhoff shares. I remember around 2014, 2015, I was stacking up Steinhoff shares, thinking, this business is rock solid, nothing can go wrong. And it was one of my biggest positions. And I mean, something went very wrong. That's also why diversification is important. And knowing that nothing just goes up, there's always risks when it comes to investing. So Paul, what do you think of Steinhoff? And have you also lost money in the process?
It's now 6 years since this bombshell initially dropped. And like you say, good riddance. And a lot of people lost a lot of money. And unfortunately, I was also one of those. I did invest. It wasn't only part of my, the index. I actually invested in Steinhoff individually, and I lost 10,000 rand. It really sucks, but you can't. These things happen, and that's why you really need to do your research. those days, everyone was just saying Steinhoff, Steinhoff, Steinhoff. I was in Marty, so we went to the rugby every Friday, and it was Steinhoff everywhere. It was going up, and I clicked the green button, and yes, it didn't work out so nicely. So I guess all we can hope for is that the responsible parties will actually, we get justice for that. Because if you lose people's money, and 10,000 rand might seem like a lot, but there's people who lost millions, and there's pension funds that lost money. People's, retirement money got lost in this whole, like a fun show that, like I often say. So yes, I hope that this actually gets resolved now, and that the responsible parties do get justice.
Now, for the next company, moving to better news, some good news, good results. Before we dive into that, let us know in the comments. Big rugby this weekend. What is your predictions? We've got Ireland, New Zealand, Springboks, France, and then, France and Argentina, Fiji, Wales. But let us know what is your predictions for the weekend, even if you just let us know South Africa, France. Personally, I'm going South Africa by 7. So let's see how that goes. It's going to be a big game. So to the good news, PSG Financial Services. You might also know them as PSG Consult. So they posted recurring headline earnings per share growth by 21%, dividend per share growth by 23%, total assets under management increased by 19%. So this is one of those classic boring businesses, asset management, investments. But the older I get, so the more experience that I get, I'd say, is the more I love boring businesses. Something that's just boring, but it produces cash flow. And, if you bring out results like this, well done, especially in an environment like this, where the consumers are taking strain, and people have less disposable income and have to pay more on loans. So well done to them. What do you think of these results, Paul?
Yeah, great results. If you consider that the market is currently trading flat, the JSE hasn't gone anywhere this year. For them to increase the AUM by 9% is basically then only new business. Because if you think about it, the AUM, the two ways that it increases is the growth in what you have, and then also the new business. But there was no growth this year. So 19% is actually exceptional for PSG Consult, or then PSG Financial Services. And they basically are a financial planning house, exactly like what I do basically as a main hustle or for a living for FinMeUp as well. I invest people's money. And like Alan Gray, PSG is deep value investors. In other words, they choose stocks with low PE ratios, like we often also do. And then in a bear market, they often don't do that well because there's not a lot of hype regarding the value stocks. But in a bear market, that I say bear. In a bull market, they don't do that well. But in a bear market, they often tend to outperform. And we've seen a bear market the last 2 years. So PSG has done really well. PSG Balance Fund is one of the best performing balance funds over the last 3 to 5 years. It's also part of my solution that I give to clients. I do there's various balance funds, and PSG is one of them. They are active managers, meaning that they buy and sell, buy and sell, buy and sell. So it's not like a Signia or Satrix or maybe even an Old Mutual. So they tend to be a little bit pricey, but I don't mind paying if you outperform the market. Remember, it's all about net returns. And in that regard, they've done really, really well. So great results for PSG.
Next and final company. This is a company that I've been following quite deeply now for over 2 years. And I really enjoy this company. I like this company. It is Karoooo with 5 O's. And their CEO has a lot of skin in the game. So that's always a good thing. Let's start off with that. And it started in South Africa, but they're also now listed in the US. And what I like about that is US companies post results every quarter. So you get to stay in the trends, follow the momentum, quarter to quarter, see the results, see the ins and outs, with presentations, with webinars. And that's what I love about that. So they posted results. Their total subscribers increased by 15%. Net subscriber additions in the quarter year over year was 31%, which was 75,000 cars or vehicles that was added. Total revenue increased by 21%. Subscription revenue, which is recurring revenue, increased by 17%. And cash generated from operating activities increased by 26% to over 300 million rand. So that's proper cash generating increase, which brings a total cash on hand to over 1 billion rand. It's already been over 1 billion rand, so it's now close to 1.1 billion rand. which is a proper cached stack. And they've got over 113,000 commercial clients. What's nice about commercial clients is these are businesses with fleets. And these fleets are increasing. And they're not likely to just drop off in a bad economy because these businesses keep functioning. They need to maintain their vehicles. And part of the commercial offering is the opportunity in ESG. Because of all the data points that they gather, they can actually allow corporates and businesses to better track the ESG. So that's not really, they haven't tapped into that market, but they have highlighted that is a big opportunity. So it's going to be interesting to watch that unfold over the next few years. And what I also liked is to see the growth in Asia. They still think this growth is slower than expected. And they saw a 26% year-over-year increase in Asia compared to 14% growth in South Africa. So South Africa definitely the biggest market for them, the most mature market. That's where it started. But they are very optimistic about Asia, and hopefully we see further increases in that growth. The previous quarter was around 20%, now it's 26%, so definitely upward momentum there. And then finally, their annual recurring revenue is now close to 3.5 billion rand. So it's a proper business, it's sitting on a healthy balance sheet. The CEO is skin in the game. There's a lot of things to like about the business. The liquidity is one problem. And the US listing obviously created a lot of hype and the share price went up, and since then it's just been stagnant. But personally, I'm looking to add to this position, just seeing how they execute quarter over quarter. Not massive numbers, but just constantly increasing. And another interesting fact, so lots of insights on this one, is they discontinue, or they basically paused Karoooo. So they've got 3 businesses. It's Cartrack, Karoooo, and Karoooo Logistics. Karoooo Logistics is also showing proper growth. Obviously, it's much more smaller, so it's from a smaller base. But they've also now turned profitable, Karoooo Logistics. Cartrack, obviously profitable. Karoooo was their own We Buy Cars. So the reasoning behind that was they collect a lot of data points. They've got a lot of cars in their system, so they can build their own We Buy Cars. And they did that. They generated close to 90 million rand revenue. So they generated proper revenues. But the thing is, the loss per share in this specific segment just continued to went downwards, and obviously they realized, this segment did not look as bright as they thought it would be. And what I like about that is they were able to say, look, we made a mistake, we're entrepreneurs, we try new things, and we're not going to get it right all the time. So, let's pause that and let's focus on the core offering. So I really like to see that, and obviously it's a bit of it was a close to 100 million rand loss. So it's not great for shareholders, but at least that stops now, and it was worth experimenting. So it's quite interesting. Anyway, so Karoooo, impressed by the management, impressed by the business. I'd like to add a little bit more. Obviously, there are risks, and liquidity is definitely one of them. It's not a risk, but it's not ideal. Anyway, Paul, any thoughts on Karoooo?
I agree with you, Higgo. I think this is, as a shareholder, you don't want to see your money being wasted and being invested in ventures that don't work out. But from a management point of view, this is very bullish for me. We tried something, we did do our best, it didn't work out. Let's cut the losses, let's refocus on what our core offering actually is, which is Cartrack. So I actually like that. With regards to share price, no real movement this year, basically flat, same as the JSE. I think 4% for the year, so not bad, with maybe a small divvy down the line. But also a company that I quite like. If for a small cap, this is one of the companies that I am considering investing in, not one of my holdings at the moment. But yes, it does get the thumbs up from me. I like this company, great company.
It's not that widely followed, and I mean, it's around a 13 billion rand market cap, so it's not even really a small cap. So it's quite interesting to see that the liquidities are that low. But let's see how it goes. Let us know in the comments what you think about Karoooo and the Renergen spectacular, or well, not spectacular, but you know what I mean. Let us know what you think. Yeah, spectacle. There we go. Thanks for watching. We are back next week. If you don't want to miss these insights, consider subscribing, and if you found some insights, consider liking. We appreciate your support, and we hope we add value to your life. Have a great day, and may the box win.